Good afternoon, everyone, and welcome back to day two of Sidoti's virtual investor conference. I'm Steve Ferrazzani, an analyst at Sidoti. I can still see some people still coming into the room, so I'll give it a few seconds. But in the interim, let me remind everyone we expect to have some time available after what we think is going to be a very informative presentation for Q&A. If you do have questions, just press that Q&A button at the bottom of your box, type in the questions, and we're going to get to as many as we can, time permitting. I don't want to take up too much time because I know we have I think this is a first-time presenter, as I recall, and I think it's a pretty exciting presentation. I got a preview a couple of weeks ago. I think you're going to be very interested in the upcoming story. So happy to welcome 5E Advanced Materials, ticker is FEAM, and we're joined by CEO Paul Weibel. Paul, I don't want to take up your time, so I'll turn it over to you.
Thanks, Steve. Appreciate the opportunity here to present today. Paul Weibel, CEO, been with the company for about 4 years. Came on board as the CFO and moved into this role in June of last year. So I'm about 1 year in the seat. So really looking forward to giving the overview of 5E. As Steve said, tickers FEAM. So 5E is a primary boron project. Many times I get asked, what is boron? Boron, at a very simple level, is the fifth element on the periodic table. It's very much a super material in that it's light, it's heat resistant, it's energy dense, it has a great tensile strength. And I use the analogy that if Iron Man were to build a suit, it would be a suit made out of boron. And if it had a little bit more boron, it probably would survive the Thanos snap. Boron is very much pervasive across defense applications. And in fact, boron sits on the Defense Department's critical materials list. Boron goes into many traditional applications such as glass and LCD screens, to cleaning supplies and ceramics, to both fiberglass and cellulose insulation, but it also touches many defense applications and kind of high value in use items, such as permanent magnets. The third hardest material on planet Earth is boron carbide. That goes into Kevlar and tank armor. It touches semiconductors. Elemental boron goes into smokeless rockets. And so there's very much, when you are in kind of the time we are in today with tariffs and trade wars and security of supply, boron kind of very much becomes in vogue from just a supply chain perspective. And there was actually an article that's relevant today, came out in Bloomberg, talking about rare earths and how the Chinese dominate that, but actually the Chinese don't have any boron, and the boron market is ultimately a global oligopoly. So it was quite fortuitous timing. Our project sits very much halfway in between Las Vegas and LA. It is a multi-year generational asset. We're permitted for 90,000 tons of boron oxide, which is about 160,000 tons of boric acid. Our first phase of commercial production will be 130,000 tons of boric acid. You can divide that by the 14 million tons, and it's a lot of mine life. We have a small scale facility that's operating today, delivering on-spec product that we're using for customer qualification as we work towards offtake agreements. And we'll be out here shortly with an update of our technical report summary and put reserves on the balance sheet as we complete pre-feed engineering and release a PFS probably in late June or early July. All major mining permits are in place. And as we think about getting into the big commercial scale that really gives us that pathway to $100 million run rate of EBITDA, we target US Exim Bank's $285 million letter of interest that we will begin diligence as we stage gate over to feed engineering. And so kind of that's, today we're focusing very much on the development, but thinking about the debt financing to build this in over the next 3 years. Here's our team, really good team, seasoned team, all have different, are excellent in various disciplines. Lonnie Bailey was at Albemarle Silver Peak mine. Josh is our CFO. He spent many years in oil and gas. Mark Zamek is one of the few people that worked for the Boron oligopoly. He spent 20 years as the North American sales manager for the largest domestic borate manufacturer, and Rod McLean has seasoned mine builder and has built projects globally much larger than ours. Our board is streamlined in that we really cover 4 disciplines. We're chemical plant above ground, which is Graham. Bryn has in situ mining experience. Barry is financing, and Kurt is policy. So this is that green spot is our deposit. It was an evaporated lake bed millions of years ago. We sit about 2 miles off of Interstate 40. We're a 2-hour drive to the Port of LA, Port of Long Beach. You can see the green line there. That is the Kinder Morgan Mojave natural gas pipeline that goes directly to the Permian. Included in our estimate today is very much that tie-in to the gas, which will run a cogen facility that will give us the power. We do have shore power today. It's only about a meg though, but it's quite useful. We have 6 parcels of real property in the state of California. Mineral rights are conveyed with the real property, and then all around us is Uncle Sam's land with the BLM. And so as I kind of noted, the project was discovered in the 60s. That led to the land acquisition and a very elaborate exploration program where the resource was defined, some small pilot plant operations in the 80s, and then the major permitting initiatives occurred in the 90s. In 1994, we received our record of decision from the BLM, as well as our state mining and reclamation plan from the Department of Conservation. As noted, very attractive geography and tied into very, very good infrastructure, being so close to the Port of LA and Long Beach. Our method of mining is a little bit different than the other borate producers, where they are very large open pits. We have a bit more of an ESG thematic. We will mine via solution. We'll inject a very dilute hydrochloric acid underground. That reacts aqueously with the mineralized zone. In turn, that comes above the surface. We'll crystallize out the boron. We'll hit that solution then with lime. That increases the pH. It drops out all the metal salts and deleterious elements as hydroxide impurities. And then you have a calcium-based waste solution that we will introduce sulfuric acid into. That does 2 things. It precipitates out gypsum, which can be sold into the drywall and cement market. And then it aqueously regenerates hydrochloric acid. With that, makeup water becomes our mining feedstock to go back down hole, and it's very much a closed loop process. So from an ESG touch point, you'll have the open pits have very large impacts on planet Earth, whereas we are about a 9-inch borehole and a plant above ground. This is a picture of our crystallizer and our large demonstration plant. We are using that. It's fully operational. We have about 18 months of mine data. We have about 12 months of chemical plant processing data. All that data has been incorporated into our pre-feed engineering program, where we've really taken the time to optimize our CapEx and our OpEx, and really focusing on producing super sacks, sending them to various customers so we can underpin our project with offtake agreements. The focus definitely has been on the CapEx and the OpEx. We're targeting the OpEx to be about, on a cash cost basis, $525 a ton. We see the price of boron at about $1,000 a ton today. The distribution market is already in the $1,200 to $1,300 a ton. And if you look at actually the supply and demand dynamics of boric acid, which is what we'll produce, the market's in a supply deficit today. There's only 6 known boron projects globally. Highly concentrated deposits of mineable borates is incredibly rare. And only 2 of those 6 projects have their permits today, and we are one of those 2. And so, we forecast utilization being the major impact to supply and demand, and that will ultimately drive pricing higher. And we've seen pricing be higher in the market, and that the other US supplier, their revenue is up 40% over the next, over the last 2, 3 years. Steve, did you have a question?
No, sorry, go ahead.
Okay. And so, if you think about the business, 525 a cost, that puts us kind of middle of the cost curve. And, if it's a good business at $1,000 a ton. It's a great business at 12 to 1,300 dollars a ton, and at 130,000 tons at run rate, there's your 100 million in EBITDA. And so we've been very vigilant in getting an optimized CapEx and OpEx. This is a very simplistic view of our flow sheet. You can see it's that closed loop process where you'll produce the primary product in the borates. You'll then drop out your byproducts. We do have lithium, it's albeit smaller quantities, and there's also magnesium, and those would be bolt-ons down the road as we think about optimizing and further reducing credits that could be accretive to our business and increase IRRs. And then obviously you have your major byproduct, which is the gypsum, and you have optionality to produce calcium chloride as well. If I think about this chart, CapEx is targeted for about $420 to $430 million. We are very much in the yellow phase where we are gearing up for commercial. We target the XM loan to be a good portion of that. There will be obviously an equity commitment that's required to come alongside that debt. We have the ability to toggle that. We are with a royalty transaction. We are unencumbered by any royalty today. And so we'll kind of assess cost of capital as we think about bringing in that remaining equity capital to come alongside the debt. I think, from a project IRR perspective, phase one falls right around that 20% IRR. And listen, given the California jurisdiction, all the major mining permits are in place. It's a very good, high quality project that I fully believe will get built and has every bit of an opportunity to get built over the next 4 years. And obviously from there, given the size of our resource, there's opportunities to scale. So as I think about, what are our catalysts here we're focusing on, we're about to deliver our PFS study. We put a release out yesterday highlighting that our vendor testing for our major pieces of kit are complete. The flow sheet's going to be locked down, and we'll stage gate over to feed engineering on the back of our PFS. We'll run a parallel process with feed engineering and the diligence for project finance, and we'll be looking to secure all of our offtakes. There's plenty of catalyst-rich opportunities here, and that we target feed engineering be about a 9-month process, and FID in about 12 to 13 months time. So with that, I think I can pass it back to you, Steve, to ask any questions.
Great, thanks a lot, Paul. I always wondered what that raise hand button does. Now I know. Sorry about that.
It flagged for me, so.
I know it works. Appreciate the presentation, extremely informative. As a reminder to everyone, we do have some time for questions. If you do have a question, press that Q&A button at the bottom of your screen and type in, and we'll get to as many as we can. And we are already seeing the queue fill up. Couple of interesting questions. One about what have you learned from the pilot program? Are you using things you learned in the planning of the larger commercial project?
Yeah, listen, one of the major things we've actually learned is that our head grade's much better than historical averages that we thought. And so what does that, like the demonstration plant small scale facility is actually utilizes evaporative crystallization. So what you'll do is you'll boil off water to increase concentrations, and then that's how you'll begin the filtration process to create to make the borates. So from an OpEx perspective, that requires natural gas, and boiling water is energy intense, and so you can go the opposite way. If you have a better performing head grade, you actually can chill that solution And as you chill, so if you have higher concentrations of borates
Yep.
just naturally from the mining side, you can chill that, and that's a more better OpEx scenario to extract
Okay.
out. And so, what we've also realized is that time and temperature are incredibly impactful to our head grade as well. So we're not like we mine, but there's very much like we are a massive chemistry equation. And so is like HCl and water all have a molecular weight, as does colmanite. And there's a reaction that occurs underground. And to the extent you can get things hotter, and sit for longer, it creates a more robust chemical reaction. And so if you think about if you have a cold glass of water and you have salt, you dump that into that cold glass of water, it doesn't all dissolve. But if you
Right.
heat that, it can be super soluble, thus being more saturated with sodium. It's a very similar application to the borates.
Okay. Okay. Um, the question is the timeline right now for the larger project. I think you ran through some of the boxes you got to check to get there. It sounds like you're making progress.
Yeah, listen, we IPO'd in the US. We were previously predominantly ASX listed,
Yeah.
and we IPO'd in March of 2022. And there was very much a culture of promotion. And while there's a lot to promote, I believe, and like catalyst driven, but it needs to be really driven off of fundamental execution.
Yeah.
Because in the US, like your word is your bond, and you need to do exactly what you say you're going to do. And if you miss those deadlines, you're going to get really punished. People will sell the stock. And so there's a big emphasis on following through and hitting our milestones. So I do believe uh, we'll get a PFS out here. I've drafted the red line's drafted. Floor's
Okay.
working on section 10, 14. The geo's done their part. Market study will be wrapped up here. That'll come out. I'd love it to be in June, but I think probably you have July 4th, so maybe it's the week after. And then we have about 9 months of feed engineering. We'll, you know, the main driver is going to be debt financing. That's
Right.
going to really facilitate it. If the debt can get underwritten, the equity will definitely follow.
Yep.
And then in turn, I think it's a 24-month build. So I think,
Okay.
target being mechanically complete in 2028, and then I think a 6-month commissioning cycle. And I think as I think about some of these executive orders and what President Trump has put out there, there's a big emphasis on including mining in the industrial base, make more in America. And listen, I don't know if manufacturing jobs will come back to the US, but I know that this project's a very easy win for the current administration.
That's right. That's right. I don't want to try to put. I don't want to go too far into the future, but do you have any line of sight to profitability or cash flow, or are we way too early on that?
Listen, I think that uh, there's opportunities on some of the so we have a team
Yep.
that has been operating the small scale facility. And listen, the first prize here, no doubt, is $100 million a year in EBITDA. So like there's an emphasis on that. But there's a point where the pilot plant has served its purpose.
Yep.
And we are looking at angles to potentially, could you repack? Could and we have Mark on our team that knows every customer in the Boreas business, and there's demand.
Yeah.
So it's something we've discussed, because listen, it would be great to reduce that cash burn. And there's value in being able to retain our team. Listen, we're not in the Gulf where there's lots of chemies and people that know how to operate chemical plants. We have a really good team today. We have 20 operators and we have 3 different supervisors. And so we want to retain that team, because as you think about scaling and going from just a demonstration to 130,000 tons, like the operators we have today are our leaders of the future. So to the extent we can at least mitigate the need to go back to the market or reduce our burn, hey, we're gonna lift some stones, and we have some ideas.
Fair enough. How important is to have those offtake agreements in place before you start construction? Or is that critical, or do you know it's there?
you need to have the offtake agreements for the debt. So you can't
Oh,
go
right.
in construction until you get the debt. And listen, I thought like we're in a great spot with like customer discussions. The offtakes are a little bit more of a challenge in the sense that a bank's looking for price and quantity to really be mitigated. The quantity is not the issue, the price is the issue. The borate market has been accustomed to two very large companies that have
Right.
very big balance sheets basically being able to sign off on 3 to 5 year market-based offtake agreements. And that's what the boron market is. And if you go talk to Exxon, they're like, well, no, we need a fixed price offtake agreement. And it's so like all of a sudden, or we need to figure out how we're going to mitigate the price. So listen, we have public LOIs out there with some very large class manufacturers, and we could target 20,000 or 25,000 tons of borates at market, and they're happy. Great, done. But we have a bankability problem then.
Oh, okay.
So we need to, listen, and I think like all options are on the table, floors, collars, equity, co-investing, and you got to think about it as it's no different, project finance is no different than going to buy a house. An offtake agreement basically simulates a job offer or a W-2 in that underwriters who's going to loan you money to put a down
They
payment on.
know you, if you're producing it, they know there are buyers.
So it's a very similar
Yeah.
process.
Okay. Okay. That's helpful. Do have a question here about your previous restructurings, and if you could walk through a little bit about your capital structure today.
Yeah, I think listen, the plan was always to raise equity in the US. We ended up being funded by convertible notes after we did a direct list. And listen, we had some permitting headwinds with the EPA. I didn't mention that one. Our final other mining permit is an underground injection control permit with Region 9 of the US EPA. And so it took a little bit longer than we anticipated to get our final approval. We did have that. So that led to kind of a first restructure and a reset of the convertible note conversion price. And then as we kind of looked to kind of continue to build on the business, the market feedback was you don't really have an investable entity. You have $82 million in convertible note debt, and you have like a $30 to $40 million market cap. And so the lenders who are both, listen, there was questions on, is this a loan to own? It wasn't. The lenders continued to be highly supportive. They just like their structure. And so, but we got to a point last December where we want equity to come into the business. We want people to believe that there's a real project here that has material upside. And this is a business that needs to be financed on equity capital. And so we did restructure number two, those notes fully equitized, and today they own about 75% of the company.
Oh, okay.
So it's a completely clean capital structure, no debt. There's those lenders, when they converted, they got warrants at 355 a share. They're in a little bit in the money, and they're a 1 year term. So they only have 9 months left on the warrant. And then we
Okay.
have all our management options did as part of that restructure get reset. They're struck at the same conversion price as the lenders, which is 646, 672 a share. So I'm quite motivated here to see a higher share
Yeah.
price. This is all my team. And in turn, you have a small amount of warrants up at $17, $18 a share, which if you buy the stock now, that's a good problem to have.
Yeah, for sure. I mean, since you talked about the stock price, you have the clean balance sheet,
Mm-hmm.
you have a clear timeline,
Yep.
you've walked through what the project looks like. Why is the stock here? What are the next near-term catalysts?
Yeah, I think so. The cap structure was a problem. Project
Yep.
economics are the next item. We've teased that out.
Yep.
And the PFS floor signing off on that CapEx, is going to be sort of like, okay, everything's believable now.
Yeah.
Um,
Yeah.
and as I think about this from just a valuation perspective, and this is all in the public domain, we kind of
Yep.
previewed this because people were they ask. But I have a modeled NPV on a DCF is about $700 million. It's about a 20% project IRR, which is a fantastic given the
Yeah.
jurisdiction we sit in and all the permits we have in place. That's just phase one. You can compare that NPV to well, I walked through the cash costs and where we see boron selling for. And you can tie out to $100 million EBITDA. If you assume mining trades on a 5 to 6 times, let's assume 6 times, times 100 million, you're at 600 million. So you can kind of see that. And I believe that with credible execution, sound IR, getting this, the story's not going to sell itself. You got to be out in the public markets,
Yep.
which is why we're doing this conference with Sidoti. And I'm at, there's other conferences we're at in New York. We're doing broker lunches and broker dinners, and we're really
Yeah.
I've got, my job is now like out in the public markets. And I think, we should start to, over time, as we put offtake agreements and we hit our catalyst, start to accrete up towards that 700 million, $600 million level. And there's 20 million shares outstanding today. So it's a nice even number. So you can start to do the math on where, we should be. And I think there's non-dilutive options such as the royalty that you could really assess. You can look towards the strategics on the equity side where it's priced at a premium in exchange for those offtake agreements. And I think we re-rate higher. And as we come into commercial production, we should be seeing this company trade at an enterprise value or DCF, have some intrinsic value attributable to the stock. And we have a phase two of expansion. And so when we start to go above that, which is completely in the realm of possibilities, the market's telling you we're getting credit for those future phases of expansion.
Excellent. There's certain metals that get very much talked about in the future demand growth. We hear about copper all the time, and moly and lithium. Antimony's been big lately because of government regulations. You're an old Wall Street guy. How'd you get involved in boron? That's not one we hear about a lot lately, right?
Yeah, so yeah, funny. I started my career at Bear Stearns, and my first day on the job, the BSAM funds blew up and well subprime. And then worked my way back to PwC, and I got my CPA. And so I joined 5E after about 7.5 years in the mining services space on the buy side. Because there's a lot of parallels to where the lithium market was 15, 20 years ago. It's the global boron market's an oligopoly, and there's very few supply of projects that can come online. And so as you think about it, it's a little bit more complex of a story in that, for lithium, people see EVs, they see the adoption rates, those CAGRs, and they're like, well, you can quickly quantify how much demand is going to be there. Whereas on the boron market, it's boron is critical and it goes into 300 applications. Some are just not that super and sexy, so they don't get the attention the batteries do. But I saw a ton of parallels to where the lithium market was. And I kind of use the analogy on the rare earths. Listen, rare earths are no doubt the star of the show today, and they're the best supporting actor, or the best. They win the whatever, the Emmy or whatever. But boron is a great supporting actor, and there's so many applications in this world that you cannot make without borates. And actually, when you think about and look at the substitutability and the value in use, there's really actually not a lot of substitutes. So that creates a pretty good position from a producer standpoint.
So you talked about there's 6 projects that are at least in the planning stages. Chances are not all 6 move. Where are we in supply and demand if we don't get even half of these?
So we on for boric acid, we are in a deficit today. It's not a material deficit yet, but the canaries in the coal mine are starting to drop. You have dead canaries in cages that are saying there's utilization here that's not working. And given that there's not a lot of substitutes, I think, listen, there's the 6 deposits. We're one, Ioneer is another. We are I think Ioneer is 170,000 tons. Capacity will be 146. Rio is a million tons of boric acid equivalent. There's been no growth capex. They're going to deplete. You have Rio has a JADAR project that I don't think it's coming online. It's had permits revoked. There's another Serbian deposit, very much still in the exploration phase. And if you think about a mining cycle, like permitting has its own kind of like microscope, but you have to prove out the resource,
Yep.
have it there. You got to do process work on the bench. Like, what's the mineral? How's it going to come out? What's the optimal way to do that? Then you got to get all your permits. You got to get infrastructure. You got to get water. You got to get rail. You got to get power. Then in turn, you need to have the commercial aspects, and you got to do the development work, and you got to raise all the money. And it's just like a cycle that's like a really long cycle. And even if you streamline permits and whatnot, well, that's like one part of it.
Yeah. Yep.
So,
Interesting. Interesting. We are just about out of time, Paul. I wish we could do this for another half hour. Any closing thoughts for everyone?
yeah, listen, I think from 5E, it's like we are a compelling opportunity with very real permits. We are in the right asset at the right time, in the right location. There's very good fundamentals on supply and demand underpinning the investment proposition for borates, and we really are the only true play, pure play way to play the boron market. So appreciate the opportunity and the ability to get the story out.
And certainly, if we didn't get to your questions, please, I know Paul will happily welcome questions. You can direct them at 5E Advanced Materials, or certainly reach out to us at Sidoti and we can forward them along. Paul, thanks so much for your time today. Hope everybody found it as informative as I did, and hope everyone enjoys the remainder of Sidoti's virtual investor conference. Thank you.
Have a great